Good day, ladies and gentlemen. We are now in chapter 4 of your textbook, and the topic of this chapter name is labor cost. And labor cost, we are focusing on the cost that the company incurs in terms of the laborers. It could be direct laborers, it could be indirect laborers, but that is not the main focus. As long as at the end of the day, it is the cost of the labor that the company incurs. I will be explaining some of the basics as I continue with different questions, but this one is very simple and is very straightforward. We are just required here, first of all, to calculate the net earnings for the week, meaning the net wage, the net salary that is due to the employee by the name John Brown. So we are calculating the net salary of this employee. And we know that the net salary is made of the basic salary plus overtime if there is overtime. Then after, we also have to add other allowances or allowances if we have allowances. Then we get to gross income after taking into account the Sundays that the employee has worked. And I'll also be deliberating on that as I proceed with the question. Now we know very clearly that we are doing the wage statement, which is Jones Brown net salary. We are doing Jones Brown net salary, and we know that the net salary or the net let us say wage, because it's a weekly net wage. A salary is a monthly earnings of employees. So now we know that when we speak of the salary, we first need to know what is the gross earnings, meaning what is the gross salary before all other deductions are taken into account. What is it that was due to an employee? And the gross salary is made of the basic wage, which is the normal salary the employee is supposed to earn if he works the normal hours and earning the normal rate. Then we add overtime if the employee has worked overtime. Then if the employee has worked on Sunday and public holiday, which is normally double pay, we also add that, and we add all the allowances, and there's quite a lot of allowances, in fact few of them, which is housing allowance, entertainment allowance, that are very normal. But now let us start with the basic wage for this employee. We say the basic salary for this employee, or the basic wage. Let us look at the information that we are provided first before we can go to our basic wage. It says John Brown is a qualified field-time interner. His normal working hours are Monday to Friday. So these are the normal working hours. Take note that your basic wage will be calculated from the hour that the employee has worked, the normal working hours. He is working Monday to Friday, 8 hours a day, and 6 hours on Saturday. Remember, in this case, Saturday is treated as the normal working hour. That means when the employee works 6 hours on Saturday, they don't get paid more than the normal rate, meaning they get paid the same way. It further says that his clock card and personal record show the following information in the respect of the month of April ending 27, starting 21st of April. Now we are provided with the Monday day where he worked 8 hours. We are provided with the 22nd, he worked 8 hours. Remember, the normal hours between Monday to Friday are 8 hours. So there was no overtime on Monday and there was no overtime on Tuesday. Then on Wednesday, the employee worked 11 hours. Then we can say 9, 10, 11. So that means there were 3 overtime hours. There were 3 overtime hours on Wednesday. On Thursday, he worked the normal 8 hours. And on Friday, he worked 9 hours. We can say that there is 1 overtime hour. Then on Saturday, he worked 6 hours. Remember, Saturday is treated as normal working day, so it is not treated as an overtime, and hence it is clarified that it is normal working day and hours. So now it does not mean that all companies will pay you overtime because you work on a Saturday. Some companies, even Sundays to other companies, can be treated as normal hours, but most of the time companies will treat Sunday as a double pay, where you paid double than you used to earn. On Sunday, we know that Sunday, obviously, this must be an overtime. And as I said to you, that most of the time companies will pay you double on Sunday and public holiday. So now we can say that this is an overtime, but we don't know if it will be double pay or it will not be a double pay. It could be a double pay. Then if it's a double pay, we'll have to account for that. So far, we don't know how Sunday is treated, how the employee or employees are being paid when they work on Sunday, which is not the normal working hours. Then after we read further, it further says that John receives a housing allowance of 500 per week. So now remember, housing allowance is part and parcel. In fact, all allowances are classified or are under gross income. This is an allowance, and also there can be entertainment allowance. Entertainment allowance will also be classified or be recorded under our gross income. It is an income that the employee has earned. Then it says his normal hourly rate is 50 rand per hour. That means this employee gets paid 50 rand per hour. Overtime is paid 1.5 times the normal rate. That means if the employee has worked overtime, it will be 50 rand times by 1.5, which will give us 75 rand. That means per hour, when the employee works overtime, he gets paid 75 rand per hour. And now what are we referring to? We are referring to the Wednesday of the 3 hours and the Thursday of the 1 hour. I don't know why I wrote there. The Thursday of the 1 hour, this employee will be paid 1.5, which is 75 rand. So now let us continue on that same note. And it says except for Sundays and public holidays. So now that means there is an exception with the 5 hours that this employee has worked on Sunday. What that exception, it means when it is paid twice at the normal rate or twice the normal rate. Remember, the normal hourly rate is 50 rand. So now that means on Sunday this employee will be paid 50 rand, but on any normal overtime the employee will be paid 75 rand, which is 1.5. So now we are very clear that this will be overtime, normal overtime, and this will be double pay. We normally say double pay, which is on Sundays and public holidays. So we are clear in terms of how are we going to calculate our gross income. Remember, gross income is made of basic salary, overtime, double pay, which is Sundays normally and public holidays, plus allowances. Then now that will be that will be part and parcel of your gross income. Therefore, now we are provided below that his pension fund contributions are as follows. 7.5 of the percent of the contribution is made by the employee, and another 7.5 is made by the employer. Now, pension fund, when you read to your book, it is the deduction that is made just after, is the first deduction to be made just after your gross income. Then, and it's a non-tax deductible deduction. Then after we have medical aid, of which medical aid we are given the amount of 2/3 contributed by the employee and 2/3 contributed by the employer. Then after we have pay as you earn, which is 23% of the taxable income. Is very clear. It's very important to make that clarity that tax is out of the taxable income, and your taxable income is after you have deducted your pension fund or your retirement annuity fund, because these are the first deductions after your gross income and they are not tax deductible. So now hence after we deduct the pension fund or the retirement annuity fund, we get to taxable income, of which in that taxable income, that is where now we can calculate the tax which this employee will pay, which is 23% out of that will be paid to SARS. Then after we have UIF, which is Unemployment Insurance Fund, of which 1% is contributed by the employee and 1% is contributed by the employer. Now, when we speak of what we call a total cost to company, we also need to take into account the contribution made by the employer and the contribution made by the employer and plus this contribution made by the employer in order for us to get to what we call total cost to the company, because the company is paying all these expenses. Then now let us continue on that same note in response now to the question, where the question says calculate John Brown's net earnings for the week. So now we are calculating the wage statement for this employee, and we know that we started with the basic wage, and now our basic wage, we need to know how many hours do we have when we want to calculate our basic wage. I will not be showing calculation separately. I'll just do everything here. We know that here it is 8 hours. We know here it is 8 hours. We know here the basic hours is 8 hours. The 3 hours is overtime. We know here is 8 hours. On Friday, 8 hours. 1 hour is public holiday. I'm focusing only on the normal hours. Remember, the employees, this employee is expected to work Monday to Friday, 8 hours. And these 8 hours are normal hours. And our basic wage is calculated only on normal hours. Unless our normal hours are less than our unless our actual hours are less than our normal hours, then we'll use the actual hours. When I'm saying actual hours being less than normal hours, I mean, for instance, if on Monday the employee worked 5 hours, so now we'll take the 5 hours, 8 hours, maybe 6 hours here, 8 hours, 8 hours. So we take the actual hours in the case where now the actual hours are less than the basic hours. But in this case, the employee worked all the 8 normal hours every day and above. Then on Saturday, we know that the employee is expected to work 8 hours. So there's 1, 2, 3, 4, 5, Monday to Friday. This employee worked 8 hours, 8 times by 5, it will give us 40 plus Saturday, which is 6 hours, of which he did work 6 hours on Saturday. So now that means the normal hours for this employee, it is a total of 46 hours. So now we say the rate per hour on the normal hours, on normal rate is 50 Rand times by 46 hours. So this will give us the basic wage. The basic wage for this employee per week, it is 2,300 before overtime is taken into account. And we did say that this employee did work overtime. And we need to say, how is the overtime being paid? It is 75 Rand, but it's preferable that you show the calculation and say it is 50 Rand times by 1.5. You don't have to say equal 75, then after you multiply by the 4 hours. That is not really necessary, as long you multiply by 1.5. Remember, we said that when it comes to the overtime, we highlighted the fact that this employee on Wednesday he worked 3 hours, and on Thursday he worked 1 extra hour. In other words, let me highlight that on Wednesday the employee worked over and above the normal hours, he worked 3 hours, and on Friday over and above the normal hours he worked extra 1 hour. So now that means 3 plus 1 will give us 4 hours of overtime. That is why now we multiply by 4. So we say 75 times by 4, it will give us an amount of 300, and this is part and parcel of the gross wage or the gross salary. Then after we continue on that same note, we look for the double pay. Now, did this employee work on Sunday? Because we're told that on Sunday this employee is paid at twice as the normal rate, meaning double the normal rate. Our normal rate is 50 Rand. So if we double the normal rate, that becomes 100 Rand that the this employee get paid per hour. And on Sunday, which is a double pay, he did work 5 hours, and all these hours become double paid. So now we'll have what we call double pay. We'll have the double time or double time. You can say double pay or double time. Now that means this employee will be paid double 50 rand times by 2 times by 5. Remember, this 2 I am doubling the pay so that he get paid double the normal rate, which is 100 rand. So the 2 is not hours, but the 5 is hours. So to say 500. The 5 is hours. Obviously 100 times by 5 will give us 500. So that is where this 500 comes in, already existing in my mind. Then after we go to allowances, we do have an allowance if my memory still serves me. Remember, I said to you that allowances are part and parcel of your gross income. It's what the employee has benefited out of. So we have housing allowance of 500. So now this is the housing allowance, although the employee might not get money in cash, but he's being some company, they will pay portion of the bond to the bond bank. So we have housing allowances or housing allowance, and the housing allowance that we are provided here, it is given to be 500. So housing allowance is an amount of 500 rands. And the housing allowance of 500 rands, it should be very specified that it is per week, because if it was per month, we'll have to be told that this month has 4 weeks. So that will say the allowance for the month divided by the number of weeks in a month, then we get the housing allowance for only 1 month. So now we continue with that. Remember, if there was entertainment allowance, you'll have to put that entertainment allowance according to the instruction that they would have instructed you with. But in this case, we don't have entertainment allowance, but please know that entertainment allowance is part and parcel of our gross income, meaning income before any deduction is taken into account. Then now we get to our total gross income. Our total gross income, which will be 1000 plus 300 plus 2300, and this gives us a total of just verify that's not correct. We have 2300 plus 300 plus 500 plus 500. This is 2300 plus 300 plus 500 plus 500. This is 3600 rands. Our gross income is 3600 rands. So now what do we need to deduct first? There are 2 deductions that we can do depending if they are available or not. The first one, it is pension fund. That is the first deduction. Pension fund is the first deduction just after your gross income. Pension fund contributions. Pension fund contribution is 7.5% of our basic salary. It is calculated from the basic salary. So now what does that mean? That means if it's calculated from basic salary, we have to say our basic salary of 2300. Remember, this is gross salary. Basic salary, there the basic wage, 2300. And I want to highlight the fact that it's from the basic wage, not from the actual wage. Actual wage might be less than the basic wage. 2300 times by 7.5%. So now this will give us times by 0.075%. This gives us an amount of 7.0.075. Oh, sorry, times by 2300. Don't know why I'm using 3.6 now. So we have 172 rand 50 cents. So this is our pension fund contribution. And I want to highlight this again. If there was retirement annuity fund, if there was retirement annuity, that retirement annuity will also first have to be deducted. Anyone can be the first, it does not matter. But if both of them are there, you deduct them both, starting with pension fund, then after retirement. If we only have retirement, you deduct the retirement. Then after you have, or you are done with this deduction or with these deductions, then after you'll get to the taxable income. You get to the taxable income. You get to the taxable income. Then our taxable income will be minus 3,600, which is 3,427 rand 50 cents. This is what you call taxable income. This is the income where tax gets to be deducted. Now, after taxable income, we'll have what you call deductions. Then now after taxable income, we go to deductions. And under our deductions, the first deduction that we record, it is pay as you earn. Pay as you earn is the tax that the employee is paying out of the taxable income. So now meaning this will be an amount of 3,427 rand 50 cents times this by, I think it was 23% our tax rate for this employee. The tax rate for this employee, not mistaken, it was 23%, which is pay as you earn out of the taxable income. So we multiply this by 23% so that you can see how much tax this employee is supposed to pay. Times by 0.23, we get 788. We get 788, and I just would like to write it here, 788.33. So now this will be the taxable, or the tax paid by this employee, or payable by this employee. Then after, we go in the order of unemployment insurance fund, which is UIF. And I also want to highlight the fact that UIF is calculated from the basic wage. And now we can see that our basic wage is 2,300. This is our basic wage. And I want to stress this because it is quite important. If UIF is calculated from the basic wage, that means if our actual wage is less than, let us say, if the actual wage is less than basic wage, we still calculate the UIF based on the basic wage. Basic wage is the amount that is the salary that the employee supposed to have earned before other deductions were taken into account. In other words, that means assuming that this employee has worked all the 46 hours. This is the basic wage. Why do you say basic wage? Because if this employee normally he works 8 hours a day, Monday to Friday, and 6 hours on Saturday, that means his normal hours is 46. And if we multiply that by 50 rand, this will give us normal salary or basic wage. Now, if in other words, if this employee happens in a random month to work only 42 hours, now if we multiply this by 50 rand, it does not give us the normal wage or the basic wage. So now we need to calculate the UIF not based on this 42 hours, but we must calculate it based on the 46 hours. So please guys, bear in mind that is very crucial to be mindful of. It will always be based on the normal hours that the employee supposed to work based on his contractual agreement with the company, or based on his operating normal hours with the company. So now in this case, we are using the 2,300, multiply this by 1%. Now after multiplying this by 1%, we'll get to our UIF. Then we say 2,300, multiply this by 0.01, we get a lousy 23 rand. Lousy 23 rand. And again, that was based on the normal or basic wage that we have. So now we have calculated the unemployment insurance fund, Then I will look for another deduction. I'll also highlight other deductions that are not here, which are also quite important to be mindful of, so that when you get to meet with them, you don't have to worry about them. Then we have another deduction, which is the medical aid, 230 contributed by the employee. Remember, I'm not focusing to what the employer is contributing now. In the later questions, then I'll also take that into account, because this is only taken into account when we want to calculate the cost to the company. So now that we're calculating the net wage, we don't worry about what the employer is contributing. So now this other 7.5 and this 230 is only relevant when we're calculating the total cost to company. Now this is the cost we only want to know the net salary for this specific employee. Then now we are told that medical aid is 230. You can be given a percentage, but they will have to tell you in what amount must the medical aid be calculated. So now we go to the medical aid deduction. Medical aid deduction. We have our medical aid deduction, which they gave it to us as 230. And other deductions that I want to bring to your attention, which are not here, it is the trade union membership fee. Trade union membership fee. There is likely to be a trade union membership fee. It's a very, very, very popular one. So please make sure that if you see that the employee has a union, then there's a contribution that is made to the union. I did speak about the allowances and other deductions that are necessary, which was the non-deductible expenses, taxable expenses, which was the retirement annuity, but we only have the pension fund. So now we don't have another expense or another deduction that need to be taken into account. Then we can throw the box in between and get the total of our deductions, which I prefer to be in brackets indicating that it's a deduction. 23 plus 230 plus 788.33 will give us 1,041 rand 33 cents. 1,041 rand 33 cents. So now this will be our deduction, our total deduction. Then this will give us what we call the net wage. This will give us what we call the net wage or the net earnings, because they use the term that says earnings. Then after we say minus 3,427 rand 50 cents, this is going to give us 2,386 rand 17 cents. So now this is the salary that will be paid to this employee for the week. So the company will pay this to this employee for the week. Who is this employee? We're talking of John Brown. Now I want to highlight the fact that the company, although the company is paying this net salary to this employee, the company is not only paying this amount. The company is also paying the deductions to the respective companies. Remember, there is a Department of Labor that deals with the Unemployment Insurance Fund. So now, meaning the company will also pay 23 rand to the Labor Department. There is pay as you earn, which is the tax, and this tax is due to who? This tax is due to SARS. So now SARS will be receiving the portion of tax. Then the medical aid company could be that different medical aid companies. You name list of them. Discover is one of them, and other medical aid. So in this case, the medical aid company, which could be Discover or any other medical aid company, will be receiving the 230 rand. It might not be on the same day, or it might be on the same day. The company can process all these deductions depending on the agreement between the company and SARS, or when does SARS allow them to pay these deductions, or Labor Department expect them to pay the 23 rand, or when does the medical aid expect them to pay the 230. So now the company is paying the net salary plus the deductions. That means in simple terms, the company is not only paying, as I said to you, the net wage, is also plus the deductions. And now I want to bring this across now so that when you do the next video, you will be more enlightened. Now, if we look at the deductions, we say our deductions are a total of 1,041 rand, 1,041 rand, 33 cents plus the net wage, which is 2,386 rand 17 cents. If we add what the company is paying, because I have highlighted the fact that the amount of tax which is pay as you earn goes to SARS, this one goes to the labor department, this one goes to the medical aid company, meaning the company that we work with in terms of the medical aid for our employees. So now if we add that those two amounts with our net wage, how much do we get? We get the taxable income. Now again, the retirement annuity amount, take note that, or the pension fund, the pension fund goes to the investment company, meaning the company will have to pay that 172 to the pension fund company, meaning where our money for pension fund or the money of the employees for their pension fund is kept. So that means the company will not keep this amount, it will also pay to the pension fund. That is why we need to say, okay, plus 172.50. In other words, I'm calculating now the total of what the company will pay. So it will be 3,600. That means the company will pay the gross. That is what the company is going to pay. So now the gross wage is what the company will pay, meaning the cost from the company point of view with this employee only. Now when we want to know the total cost to the company, we need to take into account now the other section, other expense the company was also contributing. That means we also need to add the 230 that is contributed by the company, also add the 7.5 which already have the amount for that, and also add this 1%. So it will be adding this, adding this, adding this in order for us to get to the total cost to the company. What does that simply mean in summary? That means total cost to the company, it is the gross salary plus the contributions by the employer. It is the gross salary plus the contributions by the employer, and the contributions are 7.5% and 230 and 1%, and the figures in this case tend to be the same. That means the company will be contributing the same 7.5 of pension fund, because it's the same 7.5, and the company will be contributing 1% of UIF, which is the same 23 rand. And when it comes to medical aid, the company will be contributing 230. So in other words, we'll have to add 23, add 230, and add that 172.50, which is the 7.5 contributed by the employer. Therefore, now the total of the gross plus all these three costs, then that will give what we call the cost to company, meaning the cost the company is incurring only for a salary of an employee. That's why some companies, they don't want to employ employees permanently, because they know that there is too much cost that the company will incur just to pay one employee. There are other costs that go to different companies, medical aid and UIF, which are contributed by the employer because of this employee. So now that will be it, guys. Let me say thank you. Remember, I'm highlighting this because there is a time or some exercise that will require you to calculate what you call the total cost to company and the recovery rate. Recovery rate is the total cost to company divided by the total hours. With that, guys, allow me to say thank you. God be with you. Thank you.